Hello, this is Cryptolyze. I hope you're well. On this Thursday, 11 January 2024, we meet today to talk about STX, STX Crypto. So as usual, we are going to dissect this video into two parts. A fundamental part, we will come back to what STX is, to what STX is. The usefulness, the evolution, and the news. And then we will project ourselves on the graphs for purchase prices, short, medium, long-term selling prices, because we have a very strong evolution at the level of STX. We will explain why. We must already understand that STX is highly linked to Bitcoin because it defines itself as being a layer for Bitcoin, as being a smart contract layer, but not that. Now they have changed the narrative a little bit. They are a layer 2 of Bitcoin for those who want to build on Bitcoin. This is a bit like the concept proposed by STX. It is offering a layer of modularity to Bitcoin in which we know very well that developing on Bitcoin is complicated, because precisely Bitcoin has a programming language which is very weak, in which there are very few functions. And that's also the resilience of Bitcoin through that, is that there is very little attack surface. The fewer functions we have, the fewer possibilities we have to have hacks. And therefore behind it, the more secure we have something. And precisely the point of STX is to say, okay, I don't need to evolve Bitcoin. I'm proposing a layer above to be able to offer functionalities that are not present in Bitcoin. This is really the principle of STX. They want to be able to build decentralized applications directly on BTC. So, not directly, it will be integrated into the security of Bitcoin, but it will really be the principle of Layer 2, therefore an overlay. As a reminder, Bitcoin is a Layer 1, which means that we have transactions that are carried out and instantiated directly in the same blockchain, while a Layer 2 will use the security of a Layer 1 to be able to validate. Let me explain. These will be elements that will be instantiated in STX. STX will have its own blocks, and every X time, they will register all the transactions in a form of proof directly on the main blockchain. So in our case, which would be Bitcoin. So this allows us to have decentralized finance on Bitcoin. Once again, it would not really be decentralized finance on Bitcoin, but more on Layer 2, therefore STX. On the 2 STX layer, and behind it we could have real NFTs. So NFTs are not the BRCT20 which are offered on STX. They would really be smart contracts, which would really be NFTs with functionalities specific to NFTs. I remind you that the BRCT20 are the registrations which are currently carried out on the Bitcoin chain, which are registrations in Satoshi, in small units, and in UTXO, which in fact allows you to register just a notepad. These 2-3 notes that are given, it has no functionality, it's just an inscription. This is why the term registration comes from there, although we consider them to be NFTs on Bitcoin when that is not the case at all. And for that, in fact, STX has implemented proof of transfer, which allows you to create an interconnection between Bitcoin and STX. We must understand that these are two languages which are separate. These are two worlds which are separate. So we must be able to transmit information and above all ensure that the information from STX is instantaneous, directly into the Bitcoin blocks, and that this is always the case. And for that we need an interconnection with miners, and that's why we have a cycle that has been set up with proof of transfer. It's quite simple. BTC miners give BTC directly to gain the possibility of registering a block with STX, and in exchange they will earn STX which will be mined directly. It's a bit the equivalent in the sense that we will give BTC to earn STX, and when we hold of STX, and we validate the blocks on STX on the blockchain directly, we will have a little bit of BTC which will be returned to us. So the correlation between the two is really very strong, and that's why we have STX, the STX crypto, which is strongly correlated to Bitcoin. So to go a little further, you have to understand the mechanism. Miners themselves will not systematically earn STX, but they will spend BTC to potentially be able to win STX if they are drawn. It's a bit the same principle as when you have an algorithm that you want to solve to have a chance of validating a block of BTC. It's a bit the same principle, but which is diverted and which creates a relationship between BTC miners and those who stake STX. So to give you a little bit of the image that I explained to you earlier, we will see the small blocks here which are the STX blocks, and then we will see the inscriptions which will be in the large Bitcoin blocks with the registrations of all other transactions, or in any case the current state of STX to be able to instantiate on Bitcoin. It really reminds me of the first phases of Polygon in which we had not a layer 2, but more a form of sidechain / plasma. which was precisely going to register its state on Ethereum, but which was not directly a layer 2. So there we still have the difference between the two. I think that it will evolve over time if we give Stacks a chance. Namely that at the level of tokenomics, it has still evolved quite a bit. That's when I made the last video for you. We see how it was on a diluted market cap of almost 800 million. Now we is at 3 billion because BTC took off from October. And given that STX is strongly correlated to Bitcoin, it's a bit of the principle at the same time. We also had this surge which had place on STX, although STX has valued much more than Bitcoin. And I will tell you, explain very quickly. For what? At the current level. But first, we need to take a quick look at the ecosystem because it's important. It is a blockchain that provides developers with the ability to build decentralized applications. So if we don't have a decentralized application, we have no interest in having STX. And they use a narrative which is Bitcoin. It's the most secure, it's the one with the least of problems, so you can build applications on it. And does it work? I want to tell you that we still have some applications that are in the process of being developed and that are already more or less in alpha. So there, it's worth going to Dike a little bit, to go and research a little bit what's happening in this ecosystem. I invite you to look on their Twitter, where there are some posts which are very interesting and which allow you to have examples of protocols. Maybe these protocols will have a token at some point, and if the Stacks ecosystem ever takes off, there might be an interest in farming an airdrop. Next to it, at course level. In terms of the price, we still had very good accelerations, with 5 Elliotist waves which ended with an ATH here in November 2021. ATH which was quite strong, with an STX which was around 325. And then we have a 3-step retracement, ABC, with an accumulation phase here. And behind it, expansion phase, re-is of this accumulation phase. So we left the upper part, and then we took off like an arrow, directly with a first acceleration. In October, which was the moment when we had the breakdown of 32,000 on BTC, lateralization, with precisely the period of uncertainty, and then second acceleration in which we had an STX, which took off with a lot of volatility. We are very careful. We can clearly see the heads of the wicks. Each time of these candles, we see that the wicks are systematically bought back. Especially the last one this week where we see that the BTC announcement did not do any good precisely to STX. We went, look for the liquidity that had been left here by the block before Terra Luna. Terra Luna is in this zone, really the very, very strong bearish breakout. And we had left a lot of liquidity here. And this is interesting because it means that Stacks went to seek liquidity above TRD, something that Bitcoin has not done for the moment. And this is very important. It means that here we have an STX, which is already overvalued compared to the general state of Bitcoin and the correlation between the two. So we will take this overvaluation into consideration on 2 points. One, the fact that fundamentally we consider that it is a layer which will be on Bitcoin, therefore which will bring value to Bitcoin and which will perhaps have an additional valuation around the narrative of decentralized finance. First, very strong speculation. Second, given that we are on an altcoin with a market cap which is much lower, we are at 3 billion, 3 to 4 billion. It is very low. So that means that we have very little of volume, and therefore we will have a valuation, which will be exponential, and that is why we must be interested in this type of protocol in which we will be able to have in terms of perspective a large wave 1, a large wave 2, and therefore prepare a large wave 3 and IOTAS for first target. The $5 3 or even higher go for the 2,618, etc. in the area around the $7. Nevertheless, at the level of the purchase prices, what can we expect if we ever have a very strong retracement at BTC level? I think we can go retest quite quickly here the 0.8, which is the really very strong rupture zone, because when we look here, we have an accumulation. So we have a rupture retest. In this retest, we have an accumulation. Here we have imbalance in the around 0.708. So it would be logical to go and retest this part before leaving again. The very short retest part for me would be this imbalance, which is located in this zone. Therefore, in the vicinity of 115, 120, in which we could have a wick to fetch to leave. Besides, I'm going to note these areas so that we can keep them when we do the update next time, to see whether yes or no we went to retest these areas at and in which we potentially had entries to position ourselves or to strengthen. Note that we are already on a weekly RSI, which is already overexposed. We are almost at 90, which is enormous, so we always pay close attention to this type of assets. And the FOMO that has been happening for several months on Bitcoin and on all altcoins that are linked to Bitcoin. I hope you like this video. If so, don't forget to leave me a like and a comment. It supports the work I do, and above all, it makes me happy. And don't forget that in the comments and descriptions you have a completely free investment guide. 30 pages to explain when to buy, when to sell, how to sell, and how to manage your strategy with this bull run and its potential retracements which are likely to happen. Everything is in description and comment, and we will see you very soon for a new video.